I just have to start with you because, it was looking a little bit calmer today, and yet we have this another sort of late in the day spill. Again, led by some of the mega caps like NVIDIA, Apple, and PayPal.
And Microsoft. And really, that's this latest phase is actually the stuff that had held up relatively well, people thought were havens that are giving way to some degree. That sometimes happens as a deep pullback is running its course. We'll have to see. It feels as if, though, the big picture is massive valuation adjustment, people feeling when stocks started going down, when the Nasdaq started to crack, that they were way too exposed to the same themes. A lot of mass exit from those names. And it's just fed on itself. Dip buyers, would-be dip buyers, have been completely chopped up over the course of nearly 6 weeks of declines. Now, a lot of
people
are
still doing it. Look at some of the speculative parts of the market,
well,
like
this
memes
is the thing.
And ARK Innovation.
But here's the thing: that's the stuff that's already been blasted, destroyed, left for dead. And so, if you're reducing overall positions, you're selling your longs, and maybe you're, picking up your shorts and closing them out. This is the kind of activity you would see. So I don't see that as basically hot money rushing in because they're emboldened. It's much more about, well, maybe things have gone too far in both directions for the short term.
David, I know you're more of a long-term thinker and investor, value investor. Have you switched up your strategy given all this volatility in this new world we're facing of higher rates and a slowdown?
No, we haven't. Actually, we've been slowly nibbling at our favorite tech stocks, but I'd like to echo what Michael said. The psychology for these for the Nasdaq stocks, it couldn't be worse. And behind the scenes here, even if you look at some Morningstar data, it looks like maybe 2/3 of large cap growth managers are underperforming their benchmarks. I think it's worse than that. It's not that Nasdaq's down about 30% year to date, or from its recent highs in November. But it's not like the average large cap manager's down 35, 40%. They're down much more than that. I think the redemptions are much, much more than maybe have been publicized. Psychology couldn't be worse. And there's a lot of opportunity in what was a very, very crowded trade is starting to unwind significantly. We think there's great opportunity here. We're holding our own barely, but we like what we see.
What specifically do you like? Are you adding to Apple? I think that was your biggest portfolio holding, right? And now it's sort of cratered along with some of the other parts of technology. It took a while, but it went there.
Yeah, it's getting close to an ad. It was one of our largest holdings. If it would fall a little bit more, it would make that short list. But we've been adding to Meta. We've added to PayPal a couple of times. We've added the Taiwan Semiconductor. And so we're taking this opportunity like we've always done in the past 30 years when we have bear markets. At the margin, we're trying to improve the quality, the businesses, the weightings of our most favorite stocks. And in the full course of a bear market, you have plenty of time to do that.
How's your performance held up amid all the volatility?
Not well. As we sit here today, year to date, we are down about 27%.
I was asking because I remember, after you were a long-time Berkshire Hathaway fan. I saw your interview with my colleague Becky at the meeting recently in Omaha, but you sold out of Berkshire in 2019, and the stock since then is up like more than 45%. Do you regret that?
Maybe over the last couple of months, but the stocks that we bought, Sarah, from that very large position we had in Berkshire, they have significantly outperformed what Berkshire has done since then, to the tune of almost 3-1. So, up until the last couple of months, Berkshire's done wonderfully, but in the full course of that sale and subsequent reinvestment of those Berkshire proceeds, it's been one of the best trades in our 30-year history.